What is going on, Sheep Army? This is your boy Random Arts coming with a quick video. So on this video, guys, we're going to be taking a look at Shibarium. More importantly, Shibarium Validators or Shibarium Delegators. So which one would you choose? So before I get to it, guys, make sure you smash that like button. Leave a comment down below. Love to hear your thoughts and opinion about Shibarium. So guys, when it comes to me, as far as learning, I like to see it, for it to make sense to me. So I did this little illustration. So I know it's my handwriting ugly, but bear with me. I know you guys are gonna crack a few jokes in the comment section about my handwriting, which is okay. But whether or not, some people might want to become validators, some people might want to become delegators within the Shibarium ecosystem. So first, what would be the benefit? So either one of them, whichever one you pick, you're gonna receive, more bone. You know, so if everyone thinks bone is gonna go to 100, 200, $300, then receiving bone does not seem like a bad proposition, because if we took a look at historical, like run ups within the bull market, especially for Ethereum. Now they're receiving those validators. They're receiving Ethereum, and it's not like, hey, you're receiving, a dollar amount. It's more like you're receiving X amount of Ethereum. So to break it down to you guys, a validator is the one who's gonna actually validate the transaction just to make sure everything is up and up within the ecosystem. And this is what I have here for the V for validators. So we have layer 2, this is Ethereum layer 1. So you have a whole bunch of people transaction within layer 2, and the validator is the one who's just, like, yep, everything's good, and they're approving the transaction. So what the validator actually do after that is consolidate all of this information that it received, and it's just going to push it up to the layer 1. So this is why layer 2 is so important, because if all these transactions that happen on layer 2 would have taken place on layer 1, then you would have had a clog in the Ethereum chain, and which would have pushed gas to be super high. Remember when Bored Ape Yacht Club, or when we did our NFT, some people was paying like $2,000-$3,000 just for a dang transaction to go through in gas. So the validator, is helping alleviate all of this congestion. So all these transactions that's done, validator do that, then it push it up to the Ethereum chain. So a couple of things that you may need as a validator. So, and the good thing about it, in the blog, it does specifically let you know the things that you're gonna need as far as software. So the software, you're gonna need that, and you're also gonna need a little bit of ETH. Now, as far as how much ETH, I don't know the specific behind that, but I do know you are gonna need ETH, because you're gonna, in return, in all this information, putting it on the Ethereum chain. So now the risk that's involved as far as being a validator is if you approve like a malicious transaction, or a rug pull or something like that within L2, you could potentially lose out on that transaction of the bone that was staked to actually be able to pull off the transaction. So that's one of the downside as far as being a validator. But the upside is very, very high, because in return you are receiving bone. So let's say bone reached the, if you're receiving, let's say 100 bones, every 1,000 transaction, but receiving 100 bones when bone is at $100, I mean, that's a huge price increase. That's a huge return just being a validator. So of course the validator would receive more than a delegator. So what is a delegator? Delegator is pretty much someone like, hey, I want to receive, you know, more bone as well. So you're just going to get your bone token, and you're going to actually send that over to a validator's contract. And what the validator is going to in turn do is do the same process. And you as a delegator, you're not running any nodes, anything like that. You're just sending over your bone and you're letting the validator actually do that in itself. So what risks may come with that? Same risk that the validator has is the same thing that's going to be, attached to you as well, since you're giving your bone to the validator to be able to do the transaction as well. But in turn, you do get a piece of the pie as well too, which in my opinion, more bone that you're able to accumulate, the better it is. So I did take a look here, guys, at how Polygon has their set up. So with Polygon, their current reward is at 6.12, which is not bad. So if ours, because we're not gonna know what ours is until everything is actually, actually comes out. So, and that's actually, well, I'm sorry, right now it's 5.99. So if you had $10,000 and you wanted to go ahead and do it for in a year, given that the market is bullish, because you could actually see the difference. So if we do like in a super bearish market, $10,000 in a year, you're receiving 299. That's how much it would equal out to be, $299. But don't look at it in the dollar amount, but look at it based upon that, based upon bone, how many bones you're gonna receive. Because the reason why this is so low is because in a bullish market, the price of that asset, the price of that coin would be going down. So if you're receiving that in that native coin, then your coin value compared to the US dollar is going to go down. But if you flip it into a bullish time where everything is mooning, this is a big difference. You have 10,000, you're investing $10,000 and you're receiving 6.5, 6,586 in a year. And that's only based upon, and look at this, the total reward rate, that didn't change. The only thing that's changing is the fact that, the price of that token or that price of that coin is going up. So because it's going up, your dollar amount is going to be a lot higher. So that's just being a validator on Polygon. So they're going to be the closest thing as far as to us. So if we do a delegator, we're looking at 6,086, which in my opinion is not bad, especially for you just lending out your coin. You're not doing any of the work. So it looks like, in my opinion, being a delegator, and we'll just have to see the numbers for Shiba Inu, but for Polygon's sake, being a delegator, is not that. I would actually be, want to be a delegator if the numbers, if the reward rate was that close, for Shibarium. But of course, we don't know what that's going to be yet. So you would have to definitely make the decision once we know the reward rate of which one to go with. But if it's that close for me, I would actually become a delegator and be able to receive those rewards. And remember, those, that does come with risk. So hopefully this video was able to just clarify some stuff for you guys. And one last thing before I let you go, I do want to just take a look at the 7-day chart. So bone is looking pretty sexy, $1.37. Having a little bit of pullback, which is to be expected. Shibarium is still not out. So guys, if you found some value in this content, please leave a like down. Leave a comment down below. Let me know your thoughts and opinion about which one do you think you're going to be leaning towards. So this is Random Arts, guys, signing off. Peace.